Hello and welcome to today's video. Today we're going to be talking about financial projections and forecasts for small business owners and why these are really so important for every business owner to begin to understand and be able to do themselves. This video is brought to you in part by Toledo SBDC, so if you ever have questions on the material presented, please contact them for help. So today we're talking about really what a financial projection is, what's included in those projections, how you even go about calculating them, and then why they are so important and every small business owner should be able to complete their own with a little help as needed. So let's move into really what is a financial projection. Financial projections is a forecast of future revenues and expenses. So this goes to say for about the next 3 to 5 years, what kind of sales do you expect your service or product to be having? And then what are you spending to get those sales? Each and every one of those line items will be listed in a true financial forecast. It also incorporates some historical internal data. So say your business is not a startup and you've been in business for the last year or two, you would like to input all of your current numbers, so what your sales and expenses were for those last 2 years, and that will help build out a more realistic forecast for future years. If you don't have those numbers, there's a lot of things that you can look up to find potential other companies that have similar products and services to see how they've done in the market, and you can use some estimates based on those as good starting points. There's also prediction of external market factors. So when you're going through your forecast and you're making a financial projection, you have to look at some of those factors to begin to understand if you think there may be a 5% increase in your sales over the course of 3 to 5 years, or maybe your raw materials or your supplies are going to increase by 10% year over year. So things like that you also have to take in consideration when you're doing your financial planning, your financial projection. Some of the things that go into financial projections and forecasts, and we talked about these, it's really all your expenses and sales that you can think of. There's fancier ways to say that. You can say some of your expenses are direct costs or indirect costs, and we can go through some of that, but at a high level, each of those line items will be listed. To begin with, the startup expenses is what I've listed first. So if you're a startup business, what all things are you having to prepare to be able to sell your service or your product? Anything that you list that you have to pay out of pocket, or even if you've already gotten some sort of investor or things like that, any of the funds that are there, and if you have to pay them back as well, you need to list those as your expenses. Payroll costs are a big item here. So you have to go through your employees to figure out the salary costs for them in the future years. And a lot of the things that we talk about too, you may have to include benefits for your employees and that sort of thing, which again kind of make business forecasting a little bit harder, but there's ways to make it easier too by estimating. A lot of these you can look up, or there's applications that you can use to build forecasts that have examples set for you. The sales forecast is also something that's big, so that's basically saying how much do you think you will make on a month-to-month basis with your product or service. And this a lot of times is done by estimating your market share with your pricing structure, and essentially how much do you really think you can produce to be able to make X dollars per month. And again, a lot of it you have to look at external factors if you have not been in business before, but you can still do that by comparing competitors, price points, and how much market share they may have and what you may be able to capture. Operating expenses for the first 3 years in business. So when you provide lenders, excuse me, or investors with financial projections, they're really looking for like the next 3 to 5 years. So on here I just listed 3 because you're going to need to understand pretty much at a month-to-month basis for the next 3 years what your operating expenses will be. So that may be, providing a lease for a building or your raw material input cost. So things like that, again, each line item that you pay on a monthly basis will be listed here. Projections also incorporate all the numbers, all the line items that we go through with your sales and revenue and your expenses into basically 3 statements. So a cash flow statement, an income statement, and a balance sheet. I'll have another video that we go through each of those specifically. But by inputting your expenses and sales, you can develop these cash flow statements, income statements, and balance sheets. So how financial projections are calculated. There's a lot of ways to do this. You can use templates from Excel that a lot of people have been put together trying to aid small business owners in trying to figure out where these numbers go and then how do they populate into the cash flow statement or a balance sheet statement. There's also numerous applications on the web that you can use that provide, again, just kind of a standardized template, for lack of a better word, to be able to produce your financial forecast a little bit easier. And then one thing that we recommend is actually a website called LivePlan. So LivePlan incorporates your business plan, but then also a really easy way to do your financial forecast. It asks you what your sales are expected to be, what all of your expenses are, and then it will auto-populate all of your statements for you. So you don't have to hassle and figure out, how do I create a cash flow statement? What's my P&L going to look like? It does it for you. And with help from either Toledo SBDC or someone else, you can begin to read those statements and really feel comfortable with where your numbers are at. So again, a lot of tools for this. I know we have some videos on the income statement and cash flow statement. So things like that you can research and learn a little bit more than what we're talking about today. But a link that we really recommend when you're starting your business is to go into liveplan.com. So here we are with why financial projections are so important. So you really need to start to plan your startup budget, assess where you can expect the business to become profitable, and really set benchmarks for achieving financial goals. So the last thing you want to do is to have a month that sales aren't what you thought they would be, and then you to be surprised and not know what to do. So what forecasts help you do is begin to understand the environment and to see, by moving numbers up and down, to see where you may still be profitable or where you may need to cut back on expenses for certain months. It's an excellent budgeting tool. If you don't have a financial forecast, I highly recommend it just to be able to see what future needs will be. And you can also kind of play around with the numbers and say, you know, what if something happens and I don't sell for a month, or what if my expenses skyrocket? Then you can see what you need to do after that to get back on course. And again, setting goals and staying on track, kind of what I just talked about. It really understands that if you need to sell 500 units a month, you need to be on top of it. If your sales go below 500, what's going to happen to the rest of your numbers? Or will you still be profitable? Things like that. It also helps you understand if you need any capital into your business, whether it be an investor or a lender. You can see where that growth is coming from, or convince the lenders and investors to say, I'm doing a good job. If I get X dollars, this is what will happen in the future. And you can show them a break even so they can understand that you will be able to pay them back if needed. So today was really brief on financial projections and forecasts, but it's basically a tool that all business owners should begin to have to understand the next 3 to 5 years of where, budget-wise and number-wise, where their business might take them. It helps you understand from an up and down perspective on the market or expense structure of what future needs will be. So again, if you have any further questions, contact Toledo SBDC, and also look for our videos that talks more specifically about your financial statements that you will produce with your expenses and revenues, and essentially aiding your financial forecast. Thank you and have a good day.